has been holding its own since our last update. We're actually seeing some pretty bullish action, and we're not really seeing much weakness at all in contrast to some of the other cryptos such as Bitcoin and Ethereum. We had this new primary green pattern as our new pattern, new primary. We had invalidated what was the primary pattern, but that's not a bad thing. Green is good in this case, and our red pattern is still sitting. So based on the parameters we had set, nothing has really changed to alter our perspective at all. The green is looking stronger as we go. This is our short-term linear logarithm, our linear 2-hour chart. And when we look here, I have some channel lines drawn here, and this could easily be identified as a 5-wave leading diagonal. So this could be a leading diagonal for our first wave up, and we would be in the middle of a second wave down. As I've mentioned in other videos, diagonals are the other motive pattern aside from impulses in Elliott wave theory. So while they have 5 waves, the subwaves are generally corrective. So you see ABCs, zigzags, flats, whatever, as your internal wave structures. And you see a lot of whipsaw, you see a lot of overlap. You can see how this is the 1, the 2, the 3, and the 4. The 4th wave overlaps the top of the first wave. And this is another thing. We typically have what we call an overshoot. We actually extend beyond the trend line, which is a very frequently seen characteristic of a leading diagonal. These are usually, they usually lead to a sharp reversal, which is another diagonal trait. Your subsequent wave 2 in this case is expected to go pretty deep, could retrace 76.4%, maybe more. You can also see the internal wave structure. If this is the 1-2, our third wave hit just between the 1.0 and the 1.236. Those are standard expectations for the third wave. And our 5th wave got up all the way to the 1.764 extension of this 1-2. So based on this, this is looking pretty good, but not as strong of a cue as if this had been a standard impulsive 5 wave. So I'm expecting a pullback. It looks like we're already in the middle of it at the moment. You might see a little bounce and a deeper drop for the second wave. Then after that, we should be off to the races. I'm expecting some pretty good action in Link. We're seeing similar behavior across other altcoins as well. We had a really big day in Dogecoin, actually, if I recall correctly. Yeah, we're almost up 10%. A couple of other well-known cryptos have had big days too in recent days. I think Shiba Inu, Polkadot had a big day the other day. So in contrast to what we're seeing in Bitcoin and Ethereum, most of the altcoins are showing much more promising action. As for our parameters for the red pattern, we must hold 1355. That is the red line at the bottom of the chart. And of course, we have a kind of a shorter term support sitting at 1678. That is the bottom that we hit on December 3rd. Breaking that would not necessarily be a really bad sign because we have some cushion between those two levels there. We could just end up having a lower low for our actual second wave. But if we do break that 1355, once again, we're in the red pattern. So I'm going to shift to the big picture logarithmic chart just to give us an idea of where we are. And of course, I've dropped links for these charts in the description. So be sure to check those out if you want to have a little bit more time to introspect, ponder what things look like up close. Made some changes here. So just to refresh, we have our green primary pattern, which has been primary. Nothing has changed in that regard. And this is based on a 1-2 that we had way back in January 2018. So this is a big picture pattern. Our top in May of 2021 did hit the standard 1.764 extension that you'd expect at the top of a 5th wave of a larger first wave, potentially. So based on that, the correction that we have had from 2021 all the way up to, well, actually all the way to the middle of 2021, summer 2021, would be considered a second wave. It has a 3-wave characteristic structure that you'd expect, ABC, and we have not had a lower low since. Right now, we are looking at this being a first wave up and then a B wave expanded flat, because the B wave went a little bit higher than our first wave. And the second wave seems to be behind us. We haven't had a lower low since that December 3rd low, and that is our leading diagonal from that low. The red pattern sees this entire rally as a B wave up. So you could count this as an ABC with a C wave to come. That would take us a good bit lower based on the standard extensions. If that were the case, you typically land wherever your 4th wave was in the preceding wave before that. And based on this, this would be the 3rd wave. The 4th wave would put us around 736, right? That $7 range. That's where we'd go. But like I said, until we break convincingly down through that support, the red pattern is a small probability at the moment. But of course, if we break supports, got to change our mind. Until then, though, things are looking bullish. If we hold on, our third wave is targeting between $72 and $92. Those are our standard targets for a wave 3 overhead. So looking at how this thing is kind of bursting upwards, if this really is the pattern that's in operation, the actual motive pattern, we should see this come up. We should start seeing a pretty good rally very soon. After that, expect a fourth wave consolidation. And because I'm expecting this to be an impulsive form, I wouldn't expect a sharp pullback for fourth wave, but we could see it linger. It might go sideways for a few days. Our final top would fall between 107 and 137. Those are the standard targets as displayed within this blue-green box. But as I always point out, there are some significant Fibonacci extensions overhead. If this is actually a third wave top and not a fifth wave top, we would expect to get to at least the 0.382 extension. So that would be 159, 160. That would fall within this purple box. Based on the 1-2 that we already have, this would be, whoops, look at the wrong thing here. That could put us even higher than that. The 0.61 extension overhead is at 475. So that is where the top of the box falls. There's a lot of Fibonacci confluence there at various degrees. You can see how these all line up. So that could magnetically pull us up to that 455 range. So fingers crossed, but no guarantees yet. In addition, I'd like to point out Chainlink is very unique amongst all the other cryptos. We've been going up pretty steadily, pretty consistently. You don't see any really sharp pullbacks like you do in a lot of other cryptos. Some cryptos, you know, they maybe have a good 1-2 up front, then they don't do anything for a while, and they pop up at the end. Chainlink's been a lot more consistent, a lot more linear looking. So that's just something to keep in mind. History may or may not repeat itself. We may see a sharp pullback, but as of now, things are looking pretty confidently green. So gonna keep us updated. Like I mentioned, there are some bearish developments in Bitcoin and Ethereum, which if they crash, they could pull down the altcoins. Right now we're good. So don't forget to subscribe so I can guide you through any precautions to take. And if you enjoyed my video, don't forget to give me a like. Until next time, thank you for watching and happy trading.